In this video, I'll take a look at how to trade double tops. Now, double tops are one of my favorite patterns because they're so easily identifiable, and that's good because that means the rest of the world sees it too. So at this point, we should define it. It's exactly what you think it is. It is the top of the market being tested twice. Sometimes you'll hear it referred to as an M pattern. So a double top is just simply a price that the market just, for whatever reason, can't seem to break above. The resistance has held. Now, there are a multitude of ways to trade double tops. Some people go ahead and jump at them early, but the most orthodox and basic way to trade them is to simply sell once they break down below the three lines here. Price goes up, it pulls back, it finds support. It goes up, it pulls back, you expect to find support. If it gives way, this means that everybody who is long of a currency pair, or any market for that matter, is now in deep trouble, and they have to sell their position to get out of it, to get rid of the losses, and that accelerates the movement to the downside. So here's a couple of examples I'll run through. This is what a double top looks like. It's not to the pip. I see that the first top is a few pips higher than the other one. But you can see that the basic range held a few pips off. One would say that the 113.50 level held as resistance. And there is the bottom of that M pattern. And once that breaks down, it goes lower. Now, what's particularly interesting about these double top patterns is they have a built-in measuring stick. So this one is basically 50 pips, give or take a few pips. So at this point, you would be aiming for a move down to about 112.40 or so. And you can see that happened rather quickly on the 4-hour chart. Let's take a look at another one. And I find this interesting because of a whole host of reasons, not the least of which that this double top formed right at a previous support level, which should now be resistance. So the pattern starts at this candlestick, and you can see we had that. And eyeballing it quickly, it's another, say, 50 pip pattern or so, and you can see that is basically the same distance. Within a few pips, it actually overshot just a bit. Where do you put your stop losses? Well, stop losses can be done in a multitude of ways. The most obvious place is behind them, but I prefer to do them in the middle of that last down leg because you want a built-in risk to reward ratio in your favor. If you put it up here and you're measuring for just a move to match it, then it's a 50-50 shot. It's a pretty reliable signal, don't get me wrong. But your risk to reward might be 1-to-1, and that's not ideal. So that's why a lot of times people will put their stop in the middle. And quite frankly, if it goes to the middle here, then you've got sloppy trading. You're probably going to run into some trouble. You can see here on the weekly British pound chart just how powerful a double top can be. We would draw this out like this. And sometimes they're easier to see on line charts if you choose to use those, at least to identify the patterns. You can see that the bottom here is about 137.50. Remember, this is a weekly chart. And the top is about 144.50 or so. So 137.50 to 144.50 will give us a potential 700-point move. So at this point, you'd be looking for, basically 130 and a half or so. And that's exactly what happened. So you can see it works on multiple time frames. You can even make a case for a very busy double top here. The main premise here is you're just looking for places where resistance is held more than once. And there are triple tops and quadruple tops and everything else. It's just that the double top tends to be more common and more often seen. Double tops are a great way to play a market. they don't necessarily have to be a reversal of a trend. And really, when you see this double top here, it really isn't. It is a continuation of this longer term trend. And when I get rid of this and I put a fib from all the way up here, there's a really good chance that it hits a fib. Yeah, it's right there at the 50. So that's kind of confluence there. So double tops are a great way to trade. A word on them, though, the higher the time frame, the more reliable they're going to be. A double top on a 5-minute chart can and will work quite often. But let's be honest, what happens on a 5-minute chart is more than likely going to be noise as opposed to a weekly chart. And if you think about it, it makes perfect sense because it takes quite a bit more in the way of order flow to make out a pattern on the weekly chart.